If you're thinking of buying a home in 2024, well then this video is for you. I'm going to share 7 tips to get you closer to home ownership, and reason number 7 is the most important tip, so do stay until the end. Hey everyone, Fawad Nissari here with eXp Realty. If this is your first time on this channel looking to get some insight about Canadian real estate market, then you are in the right place. I create weekly educational content related to Canadian real estate market, community tours, market updates, interest rate changes, and everything about buying and selling real estate here in the West End of Toronto. If you're into this kind of content, consider subscribing, hit the notification bell so you're notified as soon as we upload our next video. Now, we're all aware of the crazy real estate prices in the GTA, but if you're planning on buying your first property in the next 6 months or 2 years, these tips can save you time, money, and a lot of headaches. So let's get it. Number 1, check your credit. When was the last time you pulled your credit history? Now, you may have used sites like Credit Karma and other providers, but lenders mainly use Equifax or TransUnion. So order your credit history from Equifax or TransUnion to see where you stand. You can go to Equifax location to get your credit history for free, but you can also get it online for around $20. Now, generally speaking, you need a score of at least 650 to get a decent rate with a lender. Now, A lenders are major banks like Bank of Montreal, CIBC, Scotiabank, RBC, and TD. Your other option would be B lenders. Now, if you have a bruised credit, these lenders offer a lower barrier of entry to qualifying for their product, but they offset that with higher interest rate. Number 2, improve your credit. Well, now, one of the first thing a lender will look at is your credit history. Now, lender prefers borrowers who have a history of paying off credit cards and other debts on time, because obviously that signals them that you're a responsible borrower and less of a risk. Now, there are a number of factors that impact your credit score, such as payment history, utilization rate, length of credit history, inquiries on your credit report, and the type of credit accounts that you have. Now, if you have low credit score, make sure your credit card payments are up to date and you haven't missed any payment. If that's not the case, then it's most likely your credit utilization. Now, you can improve your credit report or credit score dramatically by maintaining your credit utilization below 30%. So $10,000 credit on all available credit cards that you have. You need to make sure you don't go over $3,000 each month to keep your utilization below 30%. Number 3, improve your health and wallet. Now, health and wellness has been a huge part of my life. I could talk about this for hours, but I'll stick to what's relevant for the sake of this video. The one thing you need to do more is grocery shop more. Eat breakfast at home and bring lunch to work. You will not only save money, but your health will improve simply because what you will cook would be a lot cleaner and healthier than your last minute burger run. And just to give you some perspective, let's use a couple who, for example, who have their coffee and muffin on the way to work. That's around $10 per person. You haven't even started work and you spent $20. Now, let's say you buy lunch at $15 per person, 5 days a week. Now, if you add that coffee, muffin, and lunch for both of you, that's $1,000 a month. Save that for 2 years. Now you have $24,000. Now, if you're still not convinced, pull up your credit card statement and your bank statement and add up how much money you spend on takeout. It is shocking. Number 4, limit your monthly subscription services. You see a great new service that looks amazing and you sign up for the free trial, and 3 months later, now you're just paying for it for no reason. $11.99 a month for the next 2 years. Monthly subscription services are certainly convenient, but they can add up. And it's just a waste of money. You don't need Netflix, Spotify, Amazon Prime, YouTube Premium, HBO, blah, blah, blah. You just need one subscription. That's it. That's all you need to stick to it. And you can save good amount of money. I'm not saying you can save a lot of money to go buy a house because you cut your subscription, but you need to get into the habit of saving money. Number 5, avoid job hopping. Now, employment history and incomes are 2 of the biggest factors lenders look at when evaluating for mortgage application. A new job may be a good career move, but if you plan to buy a house this year or next year or whenever you plan on, then try not to move job 6 months before you start shopping for a house, because this can be a red flag to some underwriters, especially if you're moving from one industry to another industry. That's a big, big red flag. Number 6, avoid large purchases. So, you have a car that you have been paying for the past 5 or 7 years, and now you have absolutely no payment. And then you go buy another car, and the payment's like $1,500 with 999% interest rate. Do not do that. Because if you're planning on buying a house, that $900 or $1,500 will add up on your credit, and that will drop down for what you're going to qualify. And lastly, number 7, get pre-approved, or at least have a conversation about it. I cannot stress this enough. I see potential buyers calling me all the time wanting to see properties. My first question is, well, do you know how much you can afford? They give me a vague response, but I dig deeper and ask, have you talked to a bank? Did you get a mortgage broker? Do you have a pre-approval? Well, no, we don't. Well, how do you know how much you can afford then? See, you're looking at $1 million property, and based on your income, you can qualify for $850,000. Not only you won't be able to buy $1 million home, but also lost on some nice properties at your price range because you were looking at the wrong price point. So please, before you do anything, talk to a mortgage broker or your bank to see what you can qualify for. Once you have a rough idea, then you get your full pre-approval, and then you will know exactly what you can afford, and you will shop a lot more confidently. Now, if you're planning on making a move in the next 6 months, I would love to help you buy the perfect property for your family. You can either call me, text, or schedule a call that's convenient for you. My information and calendar link is in the description box below. Thank you so much for watching, and I will see you on the next one.